Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wa tammit taslim ala nabiyyina Muhammad sallallahu alayhi wa sallam wa ala alihi wa sahbihi ajma'in wa tabi'ina lahum bi ihsanin ila yawmiddin. This is our immense pleasure to welcome you all to our weekly English lecture on contemporary issues in Zakat and Ushr, inshallah. And today we have a special guest speaker, Dr. Salman Ahmed Shaikh, who will be conducting the lecture, inshallah. This is a part of our activities and events organized by Islamic Economics Association of Kuwait University, and as it's promoting the Sharia compliant programs, strategies, models, and modules, especially in the field of Islamic finance and banking. And we are conducting lectures, talks, workshops, trainings, forums, and seminars, both in Arabic and English languages. As you know, we do have programs in every day from Saturday to Friday. And we do have also some other programs, especially skills programs. And in Islamic finance and banking programs, we are covering some wide range of areas of Islamic banking and finance and topics that related to Islamic microfinance, Islamic insurance, Islamic capital market, equity market. And we also try to conduct some talks on specific topics like sukuk, retail, wealth management, debt management, corporate banking products, practices, and some other contemporary issues. Part of that, today we are having this session on contemporary issues in Zakat and Ushr. And we'd like to invite our guest speaker, Dr. Salman Ahmed Shaikh, who is a project coordinator and editor, Islamic Economics Project, and editorial advisory board member, Emerald International Journal of Islamic and Middle Eastern Finance and Management. Dr. Salman has done his PhD in economics from National University of Malaysia and Masters in Economics from Institute of Business Administration, Karachi, Pakistan. In Islamic Economics and Finance, he has published papers in SSCI, Scopus, and ERA, index journals, along with chapters in books published by Web of Science publishers. And Dr. Salman has presented in international conference and national seminars programs in Turkey, Malaysia, Japan, Brunei, Indonesia, and Pakistan. He is a recipient of 2 Emerald Highly Commended Paper Awards. He is also editorial advisor board member of Emerald. And he is also editor of Moral Reflections on Economics, which is a monthly periodical published by Islamic Economic Projects. This is our honor to have Dr. Salman Ahmed Shaikh to conduct the lecture. Please welcome Dr. Salman.
All right. Assalamu alaikum. Can you hear my voice?
Yes, doctor.
Yeah, alhamdulillah. Can I share my screen?
Yes, sure, please. Yes. It's perfect, doctor. I think
all right. Is the screen visible?
Yeah. You can put it in slide mode, maybe. I think it's better, yeah.
Is it fine with the slideshow, or should I have it in the normal?
Slide. Yes, doctor, yeah.
Yep. So, Assalamu alaikum, everyone, and thank you again to Kuwait University Islamic Economics Association, and especially Dr. Muhyiddin for inviting me again This is my second time having an opportunity to present on some topic in Islamic economics and finance. The today's topic is a very important topic, but there is a little bit less discussion on this in our contemporary discourse as compared to some of the other issues in Islamic finance. So I hope that it will be important talk, and it will shed some light on what are the contemporary challenges that we face when we talk about the institutionalization of zakat and waqf. So I would discuss what are the issues that emanate from the juristic perspective in zakat and waqf, and also in Ushr, which is also a very important institution, and what are the contemporary challenges when we try to institutionalize these institutions and use them in the public policy framework. Now, this is going to be my presentation outline. First of all, I would discuss that what are the issues in the institutionalization of the system of zakat and Ushr. And then I would also highlight that if we go by the classical understanding, there are certain potential inconsistencies that we find in the assessment of zakat, in estimation of zakat, and also in the collection of zakat. And then by looking at those the challenges, we would also talk about that what can be the different ways of reassessing the whole institution of zakat in terms of how to administer it in the modern contemporary economies. And then finally, I would discuss one proposal of how to institutionalize zakat and waqf in an integrated structure for delivering microfinance. So that would be the application side of using zakat, Ushr, and waqf in the integrated microfinance structure.
Salman,
Yes.
Slide is not moving, I guess.
All right. All right. Let me try it
yes, now
again.
it's okay. Yeah, it's okay now. Presentation outline. Yes.
Now is it okay? All right. All right. All right. All right. Presentation outline, and now I am moving to the next slide. Is it now visible?
Next slide. No.
All right. All right.
Not visible.
All right. Is the current slide showing the table with the title Zakat, Waqf, and Ordinary Sadaqah?
No, current slide is presentation outline. Yeah, now is yes.
All right.
Okay.
All right. And now is the current slide showing the table?
Yes, yes, yes. Okay, you can proceed.
All right.
Thank you.
All right. All right. So first of all, when we talk about Islamic social finance, we come across different kinds of institutions like zakat, like Ushr, like waqf, like sadaqat and nafila, which we can call as ordinary sadaqah. So there are different features in all these institutions, and which make them more usable under particular circumstances and less useful if the circumstances change. For instance, when we talk about zakat, it is compulsory on Muslims. But when we talk about waqf and ordinary sadaqah, it's not compulsory, it's voluntary. But when we talk about zakat, there are specific heads of zakat which are specified in the Holy Quran, and we have to ensure that the zakat is paid on these particular heads of zakat. We cannot use it generally for all kinds of purposes. But when it comes to waqf, when it comes to zakat and nafila, there is more flexibility in the utilization of funds and benefits of these institutions. Likewise, in zakat, we have specific financial or commodity flows once a year when it comes to zakat, and at the time of the harvest when it comes to the concept of Ushr. But when we talk about waqf, when we talk about ordinary sadaqah, the flow of benefits is on a sustained basis. And if we allow certain provisions like the exchange and substitution of the asset, the waqf assets can be grown, can be invested, and there can be increase in value over the period of time in the waqf asset. So this can be achieved in waqf, and there is possibility of storing the value that is invested in waqf. Whereas in zakat, there is flow of funds. The zakat is paid from the rich segments of the society, and then it passes on to the poor. There is no provision or no flexibility in storing the zakatable fund. They have to be paid to the recipients of zakat. Whereas in the case of waqf, in the case of ordinary sadaqah, there is a possibility of institutionalizing the whole system, whereby it is also possible to store the value that is invested in the waqf, and that is also mobilized through ordinary sadaqah. And then there are also issues with respect to transfer of ownership. In zakat, it is important to ensure tamlik. It is important to ensure ownership to the poor. Whereas in the case of waqf, in the case of ordinary sadaqah, there is more flexibility in terms of how the benefits are provided. They can be provided directly through asset ownership, and they can also be provided indirectly by providing certain services that come out of the assets, whereby it is not necessary to ensure that the asset ownership also takes place. So what this slide basically talks about is that there are different features in different Islamic social finance tools and instruments, and utilizing those features, they can be effectively used in particular circumstances where one institution would be more useful as compared to the other institution. So what is important is that we need to ensure that we are matching the needs with the particular features of these institutions, maybe in an isolated way or in an integrated way, to ensure efficiency and scalability of any social welfare program that we want to make utilizing these institutions. Now we come to the important part of this presentation, which talks about that what are the certain challenges that we face in the administration of zakat, in the collection of zakat, in the institution of zakat, given the changes in modern economy, which were not there in the past. Now, when we talk about zakat, one important thing is that what are the assets that are subject to zakat, and what is the exemption limit. Now, the exemption limit is known as nisab. So nisab is the value of wealth below which there is no zakat. If a person owns a form of wealth which is less than the value of nisab, then that person is not obliged to pay zakat. Now, the issue is that the exemption limit has to be one in a system. But what happens in zakat is that there are multiple nisab. Like, for instance, there is nisab on gold, which is almost 10 times as much as the value of nisab in silver. So even in the cash and cash-like forms of wealth, the issue comes that there are multiple nisab. In one nisab, one person would be considered as eligible for zakat, and in another nisab, in another exemption limit, the person would be considered as responsible to pay zakat. And then when we come to livestock wealth, there are different bases of nisab in different types of livestock. For instance, in case of goat, less than 40 goat are exempted from zakat. In terms of cows, less than 5 cows are exempted. Less than 30 cows are exempted from zakat. When it comes to camels, less than 5 camels are exempted from zakat. Now, if a person is having a diversified portfolio of some cash, some financial investment, some goats, some cows, some camels, then the person might be having enough aggregated value of wealth, but the person would be considered as exempted from zakat if the value of livestock held is, let's say, 25 cows, 3 camels, or 35 sheep, and some amount of, let's say, silver, which is less than 612.35 gram of silver. So this issue comes that when there are multiple nisab, then it is possible that if a person is having a diversified portfolio of wealth, then that person might get exemption from zakat. Whereas another person who is not having a diversified wealth portfolio and only having, let's say, silver worth 700 grams of silver, the value of that would be considered as zakatable. So that is one issue that comes in front of us when we talk about the institutionalization of zakat. A diversified wealth base may result in zakat exemption despite a person having sizable aggregated value of wealth. And when we come to the next issue, the issue comes in that when we talk about the normal taxation system in public finance, it is important that the similar form of wealth is given similar treatment. So it's important for the principle of equity. Um, Now, if we have this understanding that some wealth is zakatable and other forms of wealth are not zakatable, for instance, gold and silver is zakatable, but diamond is not zakatable unless it is held for trade. If we say that the the things which are used personally are exempted from zakat, then the issue comes in that there has to be some limit, some specification of what comes in personal use and what comes in personal needs. For instance, if a person has so many luxury bungalows or so many cars, are all these assets going to be considered as exempted from zakat, or would we have to define a line as to what is the subsistence level of income which is necessary to have survival, and what is the normal standard of living? And there has to be some threshold beyond which we have to consider the excess form of wealth as zakatable. If we don't have this understanding, that what will happen is that there will be zakat on some assets, and there will be loopholes, or there will be opportunity for people to hold their wealth in assets which are not considered as zakatable, and they would be then exempted from zakat, even though they are still having enough aggregated value of wealth and they belong to the rich segment of the society. So, for instance, if a person has lots of residential houses and lots of luxury cars, very expensive watches, and so on. So, in that case, if we allow all the things in personal use to be exempted from zakat, then it is quite possible that a rich person who is spending on all these luxury items would be having an opportunity to avoid zakat. So there is wealth zakat at 2.5% on gold and silver, even if not held for trade. But on other minerals like diamonds, there is no zakat if not held for trade. If just before the zakat due date, a person converts cash or gold into diamonds, then the zakat due amount will go down. Another issue which comes in that in Ushr, we have this understanding that Ushr is applied on production that is coming from land, agricultural production which is coming from land. Now, we know that in contemporary economy, the production is not just limited to agriculture. There is now production in industrial sector, there is now production in services sector. So we know that now the agricultural production is having a much less contribution in GDP as compared to industrial sector production and as compared to the services sector contribution to the GDP. So if we only consider that production from agriculture is subject to Ushr, then it has much less value addition and contribution margin. So contribution margin is basically the difference between the selling price and the variable cost of production. So we know that in agricultural sector, there is a huge competition. There are lots of farmers, so they are selling a homogeneous good, and that homogeneous commodity cannot basically yield a lot of profits. So usually the profit margins are very, very thin in agricultural sector. So if we say that a farmer who is working in a competitive agriculture sector is subject to the concept of Ushr, whereas a person who is doing production in industry, a corporation who is doing production in the services sector is exempted from Ushr, then there comes inconsistency or anomaly. So we would be having Ushr on, let's say, farmers who might be small landowners, and they would not be having this opportunity to deduct their cost of production, to deduct their debt, and they would have to pay Ushr every time they are producing agricultural commodities. Then they would be subject to Ushr. But the producers who are doing industrial production and those who are doing production in services sector, they would be exempted altogether. So is there a case for revisiting the concept of Ushr? Is it on just a production which is coming from land, or is it on production in general? Because even in agriculture, we know that now biotechnology is used to get agricultural production. In Shafi fiqh, we know that, and also in other fiqh as well, other than Hanafi fiqh, it is understood that Ushr is applied on on edible commodities, which are storable, which can be dried. So if that is the understanding, then we know that a lot of food is produced inorganically in industries. So it is not coming out of land, it is coming out of industries. So there are agro-based industries which are basically doing value addition and which are producing huge amounts of agricultural commodities, but that is not coming out of land. Likewise, we know that agricultural commodities can be produced in labs, biotechnology can be used, vertical farming can be used. So when we talk about vertical farming, there is agricultural yield that is obtained by having the production in racks, and it is vertically rather than horizontally, and it's not necessarily going to be produced on a piece of land. So is there a case for revisiting our understanding of whether Ushr is applied only on agricultural commodities which are produced on land, or does it also apply to vertical farming? Does it also apply to production which is coming from biotechnology labs? Does it also apply to production in general, which is coming in industries, which is coming in services sector? Because the issue is that when we talk about services, we do not have storable inventories in services sector. So for instance, if there is a company who is providing airline travel airline company or a transportation company, let's say having services for rail transport or trucks or so on. So all these sectors, transportation, communication, information technology, so all these services are basically provided simultaneously, and they are created when there is need. So there is no concept of storable, tangible inventory in those sectors. So if we only have this understanding that in businesses we are going to only hold those assets subject to zakat, which are, let's say, in the form of cash or cash-like instruments, or which are considered as tradable inventory, then in services sector we won't have such a tradable, storable inventory. And if we are going to only subject them to zakat, which is applied on a particular date, then what happens is that those producers who are very efficient and who have very high market share and who have very high inventory turnover ratios, at a given point in time, they would only be holding inventories which are enough for maybe next day of sale or next few days of sale. And there is concept of just-in-time inventory where you would not be producing unless you have an order. So in that case, even the industrial sector companies would not be having so much value of tradable inventory on their balance sheet when the zakat due date comes. But if we apply Ushr on industrial production on the premise that Ushr is applied on production in general, it was applied on agricultural production when the production was predominantly coming from agriculture. But now if we have production in agro-based industries, in industries in general, and also in services sector, then all those value creating activities, producing activities should be considered under the concept of Ushr. And the flexibility in Ushr system is that it's very easy to institutionalize and administer, because in Ushr, each time when you are producing, you have to pay Ushr. And you cannot deduct cost of production, you cannot deduct your debts against it. So it's very easy to deduct Ushr at source, especially in agricultural industries where government is a monopolist. Government is the buyer. Government is buying the agricultural yield from the farmers. And in that case, at the time when the government is buying those agricultural commodities, the government can apply the Ushr. So it's very easy to administer. So should high value added production be exempted from production levy, or should there be Ushr applied on industrial production as well? Now, this is one question which we come across in contemporary, you can say, economies, where the production is not necessarily only concentrated in agriculture, but is also coming from industry and also in services sector. Now, another issue that comes in is that there is inconsistency in the burden of zakat, or in the you can say application of zakat based on different nature of businesses. For instance, if there is a producer and trader of very expensive items, like for instance expensive consumer durables, expensive specialized capital goods, now such a producer would be having a very high value of tradable inventory, and that producer or trader would be asked to pay zakat if the tradable inventory is still there. It is held for trade, but it has not been sold yet. So because it is held for trade inventory, if the zakat due date comes, we say that that producer and trader will have to pay zakat on that tradable inventory. But when we talk about services, like for instance, those who are in the food business, they would not be having a very high value of tradable inventory, and they would not be subject to any of these rules of zakat. So the former class of traders mentioned in this slide, who are selling expensive consumer durables or specialized capital goods like tractors, like heavy industrial equipment, if they have the held for trade inventory on the zakat due date, they would be subject to pay zakat. But those who are in services sector, those who are in businesses where there is no storable tradable inventory, or where the inventory value is very very small, then they would be not having the zakat obligation. Another issue comes in is that when there is business cycle downturn, where you are not able to make enough sales as a trader or as a producer, now in that case you are having a trouble. If let's say there is a recession, you have produced your goods, but you are not able to sell them. So in that case you are having a troubling situation. You are not able to have high inventory turnover ratio, you are struggling in your business. Now in that case, what you need is support, what you need is incentive, what you need is subsidy, what you need is relief. Now if we look at the understanding of zakat, which only applies uh, zakat on production in when it is held for trade, which is the current mainstream understanding. The current mainstream understanding is that on industrial production, on services sector production, there would not be any Ushr. There would only be zakat on assets which are held for trade. Now, if that is the understanding, if we apply it in a recessionary period, in that case, there is a business cycle downturn, sales are not increasing, inventory turnover ratios are very low, the producer or trader is struggling. Now, in that struggling phase, instead of having a relief, he or she would be asked to pay zakat because the inventory is remaining unsold on the zakat due date. So, if inventory is taxed rather than income, then the trader and producer struggling to make sales would be burdened even more through wealth zakat, irrespective of whether a trader and producer is able to make enough sales, let alone earn any profits. So, the producer or trader would have to basically sell the assets at throwaway prices, and it might not enable him or her to get enough profits. So it may instigate a deflationary pressure in the economy when unsold inventory is sold at significantly deflated prices, causing more recession, causing more unemployment in the case when businesses fail to survive. Another issue comes in is that when we look at the balance sheet, only the liquid assets are subject to zakat. In the current understanding, cash is considered as subject to zakat when we talk about businesses. Account receivable, any balances that you are supposed to receive from others, is also considered as subject to zakat. And then inventory, tradable inventory, is considered as subject to zakat. Investment that you have made are considered as subject to zakat. So these are the different kinds of current assets which are considered as subject to zakat. So all of these are liquid assets. But the major portion of assets are there in fixed assets like land, property, plant, equipment, machinery, heavy industrial equipment. So all these assets are having much greater proportion in the fixed assets, in the total assets, whereas the assets which are considered as zakatable are only a small part of total assets. But in different, you can say, juristic schools, the understanding about the debt exemption or debt adjustment is different. So in Hanafi fiqh, the classical understanding is that all debt is considered as adjustable against the zakatable asset. So if you sum the value of cash plus account receivable plus inventory plus investments in the balance sheet of any corporation and deduct from it all the total liabilities, then the zakatable base is going to be negative in most of the cases, because you are deducting the total value of debt against the value of only some forms of current assets. In that case, most probably in most corporations, you would have a negative zakat balance. zakat based balance. In that case, they would be considered as mustahikin zakat rather than having an opportunity or having an obligation to pay zakat. And I have done an empirical exercise on corporation that are listed in Pakistan. If we take the aggregated value of cash plus account receivable plus investments plus inventory and deduct from it all, even just the current liabilities, the zakatable base turns out to be negative. And in that case, we would be saying that the corporation sector, who is having the most share in invested capital in a modern economy, they would be considered as zakat exempted, whereas zakat would only be levied on small farmers. It will only be levied on small traders who are struggling and not able to make enough sales, and at the end of the year, on the zakat due date, they found themselves not able to sell their inventory, and now they are being asked to pay zakat as well. So this is an issue which needs a revisit. Now, if we talk about zakat on corporations, there are different proposals. And the issue in those proposals is that the onus is on the niyat, on the intention of the person who is investing in those shares. For instance, if a shareholder has a niyat, has a intention to hold these shares as as investment for long term. So in that case, the understanding is that we are going to look at the balance sheet, and in the balance sheet, we are going to sum the value of cash plus account receivable plus inventory plus investments, and we would allow deduction of debt from this balance. In that case, in most corporations, the balance turns out to be negative. So you would not have to pay any zakat on that. Now, about debt, there are different points of views. In Shafi'i fiqh, it is considered that it should not be allowed to deduct debt against the zakatable asset. In Hanfi fiqh, it is allowed to deduct all the value of debt against the zakatable assets. And there is also a difference of opinion, which is between these polar, you can say, views. Like, for instance, the contemporary scholars like Maulana Taqi Usmani, he has said that only the current liabilities should be, or the current portion of debt should be adjusted against the zakatable asset, or only the debt which is taken to obtain or purchase a zakatable asset should be considered as adjustable, whereas debt which is not taken to buy any zakatable asset, it should not be considered as exemptable from the payment of zakat. So the issue is that if we allow debt to be adjusted against only the balance of cash plus account receivable plus inventory plus investment, in most cases the corporations would have a negative zakat balance. Now, if we have the understanding that if, let's say, the investment in shares is made with a short-term investment motive, then in that case we say that we would consider the investment in share as wealth, and the whole value of that wealth is going to be considered as zakatable. Now, there are different economic implications of both understanding, and the problem is that we are putting onus on a person's intention. Now, a person's intention is very hard to know. It is very hard even to know the amwal zahira. It is very hard to basically assess what the person owns, and such ownership is visible. It is amwal zahira. So if it is very hard to even know amwal zahira, it is extremely hard or even impossible to know the intention. So if we want to institutionalize the system of zakat and ushr in contemporary economy, where government would be basically taking on the role of assessment of zakat and then collecting the zakat which is assessed, then in that case we have to have a system which is not just putting all the onus on a person's intention, because in that case it's very hard to know the intention. And in the case of real estate, modern scholars, some of the modern scholars in the mainstream view, they say that the real estate is considered as zakatable only when it is purchased with the intention for sale. And if that intention changes during the period of holding, then also the real estate would not be considered as zakatable. And even on the zakat due date, if a person changes intention, if a person says that, well, I had been having this intention to sell this real estate, and I'm holding it only for the purpose of sale. I purchased it as an investment I made investment in it from the investment motive. I was not investing in it for my personal use, but just on the zakat due date, if the person says that now my intention is different, now my intention is no longer to consider this real estate as held for trade asset, I may use it for my personal needs. I may use it personally. So in that case, we would say that, well, the real estate is not zakatable. So if we have such understanding, then the huge amount of wealth which is invested in real estate, it would not be considered as zakatable. World Bank estimates that 60% to 70% of the wealth in an economy is basically in real estate. So in real estate, there is huge amount of national wealth. If we say that even if you are buying dozens of plots, and if you do not have an intention to basically sell them, then you are exempted from zakat. Then basically we are providing a very safe haven to basically park your wealth in certain forms of assets, which are not considered as zakatable. Now, these assets and these forms of storable wealth were not very prevalent in a period of Prophet Muhammad, peace be upon him, and afterwards. So over there, most storable form of wealth was livestock. It was gold and silver. So if, let's say, the storable forms of wealth have changed, now people are investing more into financial investments, more into real estate, then we have to have a clear understanding of how to basically get them under the umbrella of zakat. Otherwise, we would be providing a very easy, safe haven to convert your wealth into certain assets other than gold and silver, and you would be basically having an exemption from zakat. So this is a very important issue, that should we allow all the debt to be excluded in zakat assessment on shares? If that is the case, then basically all the corporations would become exempted from zakat, and they are basically, having the most amount of invested capital in businesses in contemporary economies. And there is also a need for a filter on consumption to ensure redistribution. We know from the example of Hazrat Umar, may Allah be pleased with him. His example is there in front of us. When he saw that the horses became very, very expensive, and they were having a value of, several amount of camels. Then when he realized that, well, it's a very expensive storable form of wealth, he did not keep horses exempted from zakat. He brought horses under the zakat net. Likewise, we have examples in the period of Hazrat Usman radhiyallahu anhu. So sorry, we have examples of jurists who are expanding the coverage of zakat to contemporary assets and forms of wealth. And if we we would not do that consistently, then we would be allowing a very easy, safe haven to avoid zakat. There is also a need to have a understanding that what is a normal standard of living. So for instance, if, let's say, a person has one or two cars or one or two houses, this is enough for his personal consumption. Now, if he is investing a lot into sport cars or branded watches or luxurious bungalows, then we have to basically have a limit on what is considered as personal need. And beyond that, we should have this understanding that if you would have lots of plots, lots of luxury bungalows, lots of sports cars, then it would not be considered that all of these are your personal assets and are assets which are belonging to the zaruriya. Now we have this provision in fiqh that Imam Shatibi and others have classified deeds into zaruriya, into hajiya, into tahsiniya. So we can use this understanding to basically evolve a system where a certain standard of living would be acceptable. And beyond that, if, let's say, a person is investing even in assets like cars, sports cars, luxury bungalows, they would be considered as zakatable. Otherwise, we would be providing a very easy way to avoid zakat. And then In the distribution of zakat, another important issue comes in, which is tamlik. The understanding in tamlik is that you have to make someone owner of the amount of zakat, so that the zakat obligation is complete. Is it is considered necessary that you have to make someone owner of zakat amount for the zakat obligation to be considered as complete, and you are considered as having completed the obligation of zakat. Now, if we go by this understanding, that what happens is that there are certain kinds of public goods and common property resources which are very beneficial for the society, and they benefit the society members, but there is no private ownership in common property resources or in public goods, but they are very useful for the people and people use them. So is zakat amount for the mustahikin? If we go by this understanding, then even the direct and indirect benefits can be provided from the zakat amount. But if we consider that the harf lam is basically representing the compulsion to ensure asset transfer, asset ownership, it is signifying tamlik requirement, then in that case we would be having a much constrained way of utilizing the zakat funds. So there are scholars who say that in the 8 heads of zakat, lam harf is used with the first four, and fi word is used with the last four, and only the understanding that zakat amount is to be used for the welfare of the people is consistent with both the lam harf and also with the fi harf. So there are scholars like Yusuf al-Quzawi himself, and also Maulana Amin Hassan Islahi, and there are many other scholars who say that it is not necessary that the benefit of the zakat amount has to be provided necessarily through tabligh. If it is provided through a common property resource, through a public good, which is also benefiting the poor at large, then this is also possible. So these are some of the issues. Now, if we are going to revisit, it is important that we should not ignore the nusus. So if there is clear guideline from Quran or Sunnah to Hadith, we should not basically bypass it. We cannot do that. If we would do that, then definitely we would be making a huge error. So there are some scholars who have said that, well, revisit the nisab, revisit the whole understanding. No, that is not true, and that is not the right approach, because if we have a clear guideline from Quran, from Sunnah, from Hadith, we should not bypass it. We need to revisit within the framework of nusus. So nusus shall be the primary source to think over redesigning the administration. For instance, nisab and rates which are mentioned in nusus, they cannot be altered. So we cannot say that zakat was 2.5% in olden times, now it can be 5%, now it can be 10%. No, we cannot do that. We also cannot change the nisab. But within that, if let's say Quran says that min amwalihim, if Quran says that you take out zakat from their wealth, then wealth is basically going to have different forms in different time periods. In olden time periods, it might be considered as livestock. Livestock is a major form of storable wealth in, let's say, olden times. But now, if let's say wealth is invested more into real estate, financial investments, even sports cars or stuff like that, paintings, expensive paintings, and diamonds and so on, so minerals. So if these are the contemporary storable forms of wealth which are more prevalent, which are more valuable, then we have to also bring them under the head of zakat. And we have a precedent. We have a precedent from Hazrat Umar who brought horses into the zakat net, and he got to know that they are very valuable, and they are even more valuable as compared to camels, which are considered as zakatable. So why not there should be a zakat on that? And there is also need for ijtihad in some cases. For instance, if we go by the understanding of Jamhur Fuqaha, other than the Hanfi jurists, they consider that there is nisab for Ushr, which is 653 kilogram of production. Now, that is very useful when it comes to solid production, but there is production now in liquid form as well. For instance, honey, for instance, oil. So there has to be a revisit of how to apply a, a, a unit which is very useful for let's say solid forms of production, but it might not be applicable to liquid forms of production, and also it might not be applicable in services sector production, where you do not have a tangible production, but still there is value creating activity. So such deliberation can be revisited and modified in the light of experience and new knowledge and new ways of administration. And we know that in Hazrat Usman Radhiyallahu period, there was an administrative decision taken to make a distinction between Amwale Zahira and Amwale Batina. Now, nowadays we consider that this was part of nusus, this was part of the Sharia. It's not the case. We need to understand that it was just an administrative decision taken to ease the zakat assessment and collection and administration. But if, let's say, nowadays we have blockchain technology, nowadays it is the government itself which is providing the property rights to cars, to real estate. Then in that case, it's very easy to basically identify who is the owner of a particular car, who is the owner of a particular piece of land. It's very easy because it is the government itself which is providing the property rights. Government knows it firsthand when a particular asset is transferred to a particular owner. So it is in the government's knowledge. And the Amwale Zahira of the past are, Amwale Batina. It's very hard to basically look at a livestock and know its owner, as compared to know who is having ownership of a bank balance in a bank account. So the Amwale Batina of past are now Amwale Zahira, and Amwale Zahira of past are somewhat difficult to identify and difficult to basically know the owner of livestock as compared to in past. So if Amwale Zahira and Amwale Batina distinction was only for administrative reasons, if, let's say, now we have blockchain technology, now we have this compulsion that all people in all countries have to submit their wealth statement, and in that wealth statement they have to declare all their assets. If they don't, they would be doing an illegal activity by not declaring a particular asset which they own. And in those assets where government itself is giving property rights, we can very easily identify the owners of those assets, and we can plot those assets under zakat. And there has to be consistent application of zakat in all forms of wealth. Otherwise, if we would be only considering some kinds of production like dried food items as subject to Ushr, and if we would be ignoring all the agro-based industrial production in general, or services sector production, if we would be just applying zakat on gold and silver and ignoring all the other forms of historical wealth, then there would be a very easy way to avoid zakat. So if, let's say, we come across those hadith which mention that when Prophet Muhammad, peace be upon him, saw one lady who was having a gold bangle, Prophet said that if you have not paid zakat on this gold bangle, then be ready that you might be given bangles of fire on Judgment Day. So if, let's say, that lady had been wearing not gold bangle but diamond jewelry, so in that case, what we would have obtained as guidance from Prophet Muhammad, peace be upon him, he would have still be consistent and applied the same principle on other forms of storable wealth. Likewise, if hadith mentioned that if livestock is there with some person, and that person has not paid zakat on that livestock, then that livestock would be trampling that person on Judgment Day. So if, let's say, the livestock would be hurting the owner if zakat is not paid on Judgment Day, what about the expensive sport cars owners? What about the owners of huge amounts of real estate? There are people who own huge amounts of real estate. If we consider all of these exempted from zakat, and if we only have this understanding that it is based on niyat, and if niyat changes, during holding period or even on the zakat due date, the person is exempted from zakat, then in that case we would be providing a very easy way out to basically avoid zakat, which is not only is not acceptable from the religious point of view, but it is also having a very negative impact on the socio-economic welfare, because it's not just that we say that it's makruh to do such zakat arbitrage activity. It is makruh. It is definitely not ideal. It is definitely going to be, there will be an accountability in afterlife. But what about this life? Zakat is not just a religious responsibility. It is also a very important socio-economic welfare institution in Islamic social finance. So if we go by the principle of anfa lil fuqara, we have to basically ensure that such huge amounts of wealth invested in real estate, invested in other contemporary forms of wealth, and such forms of production which are contemporary and which our fuqaha would not have seen, like Professor Yusuf al-Quzavi, Allama Yusuf al-Quzavi has said that our fuqaha saw certain forms of wealth and they applied Islamic principles very consistently, but they are no longer there, and we have to apply those principles and their understanding to contemporary forms of wealth. Otherwise, we would be having a very negative impact. So this is, the essence of the issues in zakat. So if we go and look at Fiqh Zakat by Yusuf al-Quzavi, he says that if zakat is meant to purify wealth, if that is the purpose of zakat, that it is meant to purify wealth, as is stated in nusus, it is stated in Quran, then we cannot have this understanding that some form of wealth would be subject to zakat, whereas the other forms of wealth, which is having much huge proportion in the overall national wealth, we cannot have this understanding that they would not be considered as having the need for purification. If the zakat is purifying wealth, if the purpose is that, then it cannot be the case that it is only purifying, let's say, wealth which is stored in gold and silver, but not which is stored in real estate or sports cars or expensive paintings and so on. So the general text of the Quran and Sunnah confirm that there is a right, a sadaqah, or a benefit in all forms of wealth, which is the understanding from Qardawi, Fiqh Zakat, and Yusuf al-Qardawi. He says, Allama Yusuf al-Qardawi, that wealth of any kind is in need of purification. If we go by this understanding, this is not a deviation from the nusus. It is basically a consistent application of the nusus, which should be implemented if we are going to revisit it. Now, if we go by the understanding in Ushr, which is in the classical, you can say, understanding, if we go by the classical understanding, only the agricultural production which is coming from land is considered as subject to Ushr. But likewise, the value creating activities are not limited to agriculture nowadays. In the composition of GDP, industrial production, services sector production has much greater value, as I have already tried to explain. So if, let's say, Ushr is applied on value creating activity, so the essence of Ushr was a charge on the value of production that you are making. Now, no matter what kind of production you are making and how you are making it, the production process itself should not be, or the place where you are doing the production, that should not be the criterion. The criterion should be that you are making a valuable production. So if you are having any value creating activity in agriculture or outside of agriculture, that should be considered as subject to Ushr. That would be a consistent application of nusus rather than a deviation. Otherwise, what we would be saying is that a small farmer who is doing primitive forms of production methods and doing production of food items, inland, he or she would be having to pay Ushr. But the person who is doing large scale production in biotechnology labs, large scale production in vertical farming, large scale production in agro based industries, that particular industrialist or agriculturalist would not be considered as having the liability to pay Ushr. That would be quite an inconsistent thing. Not only inconsistent, but from the redistribution point of view, we would be saying that the small farmers are supposed to pay Ushr, whereas the large industrialists who are producing agriculture and industry, agricultural products in industry, or who are doing production in industry, they are going to be not having the obligation to pay Ushr. We know Denmark, we know many other European countries who are producing a lot in dairy products, a lot in agricultural production, but that is not coming necessarily from the land. But if we only confine Ushr to production that is coming from the land, then we would be ignoring and giving a very safe haven and a very easy way out to avoid Ushr rules. If we would ignore value creating activities of production outside of the land itself. So a consistent application of nusus would imply that we should be considering the extension wherever we find the illat for it. Definitely, this ijtihad has to be done by the scholars. Ijtihad bil qiyas need to be done, and illat has to be found. But if we look at the nusus, the illat seems to be that Ushr is applied on value of production. Now, in olden times, you were doing agricultural production predominantly in the land, and you were predominantly producing only the forms of agriculture which were very prevalent in Arabia. But if, let's say, there are other agricultural items, so like Hanafi jurists, they have applied Ushr on all types of agricultural commodities. They have not confined it only to edible items, or they have not made this distinction. They have said that no matter whether the agricultural production is belonging to edible items or not belonging to edible items, all produce from land should be subject to Ushr. And they have also this understanding that there is no nisab. You cannot really deduct anything in terms of cost of production or debt when you are paying the Ushr. So basically, it's very much like the general sales tax of today. The general sales tax which is applied on production, it does not allow your cost of production to be deducted. It does not allow debt to be deducted. It is applied directly on the value of produce. So we can use this contemporary system to basically apply Ushr in contemporary economies. So the point which I'm making is that if the essence of zakat on production is to charge value creating production in a commercial enterprise done with a commercial motive, then it can be extended to contemporary value creating activities in manufacturing and services industry. So this is the basic summary of the proposal. So all forms of wealth or value creating activity should be made subject to zakat and Ushr. So zakat should be applied on wealth which is not invested wealth. It is not invested with a commercial motive. So any amount of wealth or any form of wealth which you hold, which is beyond your personal use and which is not invested. So if it is real asset, if it is financial asset, any non-invested real trading and monetary assets that store value except those in personal use should be subject to the zakat on wealth, because Quran says Quran uses the word mal. It does not give any exemption. And Ibn al-Arabi has said, and Yusuf al-Quzawi has quoted Ibn al-Arabi, and Ibn al-Arabi very rightly said that if people say that zakat is not applied to particular forms of wealth, they have to provide any evidence from the nusus, because if we look at the Quran uses the word mal, and if you look at hadith only exempts that mal, that wealth which is in personal use. Now there has to be some understanding of what comes in personal needs and what does not come in personal needs. So if we have basically made this distinction in our fiqh that there are needs which are in zaruriya, there are needs which come in hajiya, there are needs which come in tahsiniya. So we can use this distinction at the government level to basically define that this is the normal standard of living. And if we are going to see people who are having dozens of houses, dozens of sports cars, very expensive paintings, very expensive mineral wealth or financial wealth, all of that should come under the zakat on wealth. Likewise, on agricultural production, if let's say the water supply as capital is provided by the farmer himself, herself, then there should be nisf Ushr, because the cost of production is high in such a production process where water supply is provided by the farmer himself, herself. But when there is agricultural production where water supply is not coming through investment by the farmer himself, it is coming from a natural resource like rain-fed land. So in those cases where cost of production is low and only there is intensive use of labor effort, so in that case, the value of production should be subject to the whole amount of Ushr, meaning 10%. And if let's say Ushr is applied on value creating activity, if it was agriculture, which was the main source of value creating activity, now if value creating activities or production is happening in industries, in biotechnology labs, in vertical farms, so in that case we should be applying Ushr on industrial production. And we would be using the nusus. So nusus says that if there is intensive use of labor or capital both, then you apply nisf Ushr. If there is intensive use of only labor and the water supply as capital resource is not having any there is no cost involved as in rain-fed land in providing or accessing water supply. So in that case, where cost of production is low, you are going to pay a much greater levy, which is 10%. So if we take this essence, that intensive use of labor or capital, or both labor and capital, that is going to be determining whether nisf Ushr is applied or whole Ushr is applied on any value creating activity or production, we can apply and extend this to industrial production. We can apply and extend it to all value creating activities where we find that either labor is involved or capital is involved or both are involved. So industrial production with intensive use of both labor and capital, they should also be considered as subject to Ushr. And we can use the general sales tax to basically administer the whole system, because in Ushr we say that you cannot adjust your cost of production, you cannot adjust your debt. So it means that only the value of produce is subject to Ushr, and the sales tax is very much like that. It's a charge which is applied at the level of production facility. So it's applied on factories, and then definitely they can pass it on to the consumers depending on the elasticity of demand and supply. But the system of general sales tax or value added tax can be used to apply Ushr on contemporary forms of production. Likewise, rental income or financial investment income, where only capital is involved. So when you are basically buying a real estate and giving it on rent, you are just using your capital. You are not using your labor. So this is a value creating activity in which only capital is involved, not labor. So Allama Yusuf al-Qurzawi says that this is a production activity, value creating activity in which you are applying capital and not labor. So the income that you derive from it should be considered as subject to Ushr. And in the case of Ushr, because there is no concept of holane hol, meaning that there is no compulsion to wait for the whole year to pass on that income which is earned, you would be not allowing the possibility to the person who has earned that income to basically spend that income during the year or convert it into a form of wealth which is not subject to zakat. You would not be giving that opportunity to people. Otherwise, what happens is that in the current understanding, what we say is that no matter whatever financial income or rental income you are getting, you would not be asked to pay zakat right away, but you can wait for the whole year. You can spend the whole income that you have earned. You can invest it into assets which are not zakatable, and then in that case, you would not be paying anything when the zakat due date comes. But if you apply Ushr on that, it's very easy to administer, and it is also not going to allow this opportunity that you can spend all you have earned and you can invest it in non-zakatable assets so that you are exempted from zakat. So we would not be allowing that opportunity if you apply Ushr rules. And applying Ushr rules is also consistent with the general understanding of Ushr. It is a charge on value of production, and where you look at whether there is intensive use of both labor and capital or only labor. So based on that, you apply nisf Ushr or Ushr. So if we have industrial production, services sector production, we can also apply Ushr rules on that as well. So Allama Yusuf al-Qurzawi says that if we have rental income where investment of capital is there in real estate, it should be subject to deduction at source, and the deduction should be made right away, like we have in the case of Ushr. So likewise, we have consultancy income where only labor is involved. and capital is not involved, in that case also this is a value creating activity which can come under Ushr if we apply the this understanding which I have tried to explain. Salaried income and royalty income, they can also be brought under the rules of zakat and Ushr.
Dr. Salman, hello.
Can you hear my voice?
Yes, yes, yeah. I think there
Okay,
is
I
some
think there
interruption.
was a,
It's okay now.
glitch. Yeah.
Yes, please.
So just give me 5 or 7 minutes, and I
No
will be
problem.
continuing.
You can continue. It's okay. Inshallah.
All right, all right, all right. So let me now discuss some issues in cash work for work in general. When we talk about institutionalization of work, still we find that there are certain problems. One problem is that in classical understanding, we say that only the non-transferable assets should be used in work. And transferable assets should not be used for work. So it was said that, well, if you are let's say dedicating agricultural land for wakaf, you can dedicate the land itself, but you cannot dedicate those transferable assets which are tools of doing production on land, because they would not have a very long life. And for wakf, it is important that the asset which you are dedicating should remain in existence. And when it comes to cash, uh, cash is something which gives you benefit when you are spending it. So if you keep cash with yourself, you would not be having any benefit out of it. So when you would be using the cash is no longer there. And if it is necessary that in work you have to use an asset which is always in existence, which does not lose its existence. So in that case, the classical understanding was that, well, we cannot use cash for work, and that is still the views of many of the Hanafi jurists as well, who have this understanding that only the non-transferable assets which are going to have a very long life and which would remain in existence for a long period of time, only they can be considered as subject matter for waqf. Now, if we look at contemporary economy, what happens is that most people do not have real estate. Most people would not be owning real estate in excess of their personal needs, which they can dedicate for a social cause. So most people would be having little amount of cash. Some would be having, uh, few reals, or some would be having more reals. But most of the people would be owning little amount of wealth as compared to owning the whole real estate property in excess of their needs. So if we want to, let's say, mobilize funds at large, if we want to pool funds at large, if we want to involve a lot of people in the mobilization of funds for a social cause, a better way is to use cash waqf. So in Indonesia and Malaysia and in other parts of Southeast Asia, the contemporary jurists have looked at this issue, and they have allowed cash work based on the understanding that uh, you can have a cash work, and it's not that when you are spending cash, you are losing existence of the whole asset. They say that, well, you can use cash with real estate as well. So you can have an asset which is real estate, and you can also allow cash work for donations. So in that case, you would be having some asset which is real estate, which is going to be non-transferable, and which would not be having a very fragile, you can say, life, or a short life. and you can have cash on top of that, and you can take on cash waqf donations, and you can still be having a waqf framework where the whole value of waqf would not just disappear or destroy when you are spending cash. So cash waqf is considered as allowed by many of the contemporary jurists, but still in some parts of the world, especially in South Asia, like in Pakistan, like in Bangladesh, people are hesitant to give a formal fatwa on it. And if you look at the legislation, especially I have studied Pakistan, people say informally that cash work can be used, but when we look at the law itself, the law does not recognize cash work as such. So unless the law recognizes it, you cannot have a legal existence of a cash work unless a law has this provision. So for private sector involvement, it is important that first of all you need to recognize cash work. So informal views and opinions are not considered as enough to basically have this ability to organize cash work donations formally and in a legal way. So unless the law recognizes, you cannot have private sector basically coming up with cash work. So that is one important thing which needs to be revisited. And if you look at the views of Hanafi fiqh, especially Imam Abu Hanifa, he was of the view that the waqf asset can even be transferred back to the waqif as well. He had that understanding. Definitely, the other jurists, even his two major disciples and the other Hanafi jurists would have a different understanding later on. But Imam Abu Hanifa had this understanding that the waqf asset might be transferred to the waqif as well. So in his views, there is a case for temporary waqf as well, and that has a very important implication, because there are people who would be having no income source post retirement, but during their working age they have savings, so they might be very interested to contribute, let's say, a particular form of asset like cash or amount in bank or a real estate for a certain period of time, let's say for 20 years, for 30 years, and they would then be looking to get that asset back when they have the need. So in waqf understanding, what we are saying at the moment is that either you dedicate permanently and forever, you have to dedicate it forever, or you just do not dedicate. So there is no in between scenario, no in between kind of flexibility, that you can dedicate, let's say, for 20 years a piece of land which you are not using, but you would be using it, let's say, when your son is married, and then you would be giving that piece of land to your son when he gets married. But for, let's say, the next 10 or 20 years, you are not using that real estate. So why can't you let's say dedicate that asset on temporary basis? It's still better than not contributing at all, or not contributing even on short-term basis. So if we allow temporary work, there will be greater involvement of people who would be putting forward their wealth, which is liquid as well as illiquid, for temporary let's say period, and they would be, let's say, increasing the scale of funds that are mobilized. So when we look at banks do what? They pool deposits. And if let's say banks say that you can only make a deposit for a term of 10 years, how many people would deposit in bank? People would not deposit, because people would feel that, well, if we are to deposit with a very, very long maturity, and if only that is the option, people would feel like, well, if we need funds on short term, and if we have this withdrawal requirement, why would we invest? So if we look at the banking deposits composition, very little amount of deposits are placed on long-term basis, and huge amounts of deposits are placed in current account and saving account. Saving account also do not have withdrawal restrictions. So 70% of the deposits in banks are basically in current account and saving account, and only 30% are in term deposit account. And even in term deposit accounts, the most of the funds are deposited on a very short-term maturity basis. So if we allow temporary work, there can be greater mobilization, especially of cash and also of real estate as well. So that is one contemporary issue that is very important. In Imam Abu Hanifa views, we can get some allowance for that. And also there is another way out. Another way out is that you consider the investment as कर्ज. So if let's say you are using cash, you might give a कर्ज, and कर्ज is for a finite duration. कर्ज is not for infinite duration, or it is not given forever. So you can use the mode of कर्ज. So when I have spoken with a lot of contemporary ulama, they have given this suggestion that you can organize it not as a temporary work, but call it as Qarz Hasan, call it at Qarz. So when you call it as Qarz, Qarz is for a finite period, and then you can have a temporary contribution in the pool of funds which are mobilized for a social cause. Can the assets be exchanged and substituted if such transformation and revitalization benefits the work assets, increases the value of work assets? Now we know that in Southeast Asia, especially in Singapore, Malaysia, we have seen work-based hotels, work-based malls, work-based shopping centers, work-based hospitals. So one way is to keep the land as idle, and then if you do not really build upon it, if you do not really renovate it or make it a shopping center or a mall or a hotel or a hospital, you would not be getting much benefit out of it. But if you, let's say, commercially invest in such an asset, then there is a huge benefit in the value of asset, and it can increase exponentially. So can work assets be exchanged and substituted with an investment motive, with a commercial motive? Now, in our classical fiqh, what we see is that there is allowance for exchange and substitution in Hanafi fiqh, but with very strict guidelines. And those guidelines also have a very clear rationale and a very understandable rationale that they want to avoid misutilization. But sometimes there is a commercial case for exchange and substitution. So our classical fiqh, especially in Hanafi fiqh, it allows substitution, but with very strict guidelines that you can do it only when the asset which is in waqf, if let's say it's a piece of land, it is no longer usable, no longer giving any benefit at all. So if it is completely unusable, completely benefitless, then you can exchange and substitute. But only for the commercial motive that the value can increase this much if you invest, you cannot do that for commercial reasons. You can only use it when the waqf asset or waqf land is completely unusable. So we can revisit this stance and see that if the exchange and substitution, especially in private sector managed waqf, increases the way or the waqf asset is effectively utilized and managed. And then another issue is that can the purpose or beneficial use be changed with time through a process with or without the consent of Waqif? For instance, if Waqif in 12th century says that, well, you use the Waqf land for a particular benefit. Now, it is quite possible that technology changes and that benefit is no longer relevant. So can we basically change the benefit? Or what we can do in practical scenario is that whenever a Waqf deed is prepared, we can at least include one provision in the Waqf deed which allows the court or the government to basically change the benefits clause or the way benefits are provided. If let's say times dictate that, well, the original benefit is no longer necessary, is no longer, let's say, relevant. So for instance, if a person has said that, well, provide clean water, drinking water to residents of a particular facility from let's say the waqf income. Now, if that residential location is no longer having enough residents, or there are residents but they are very rich and they are able to afford clean drinking water themselves, or if that clean drinking water is already provided by government. So if the benefits are no longer relevant, can the benefits be revised as well without the consent of Waqif? Because it is quite possible that the Waqif is no longer alive when, let's say, the benefits become irrelevant or they lose their relevance. So when times change, when technology changes, can the Waqf deed be changed without the consent of Waqif? So one way out is that we allow in the Waqf deed a provision which gives court or the government the right to basically change the benefits clause. And can Waqf be integrated with commercial finance instrument? What we are seeing in Indonesia is a very interesting exercise where they are linking social finance with commercial finance. So Sukuk is a capital market instrument, and it is primarily issued with a commercial motive. It's a capital market instrument, and it is a priced instrument. The investors in Sukuk would be getting a return out of it. Now, can we link Waqf with commercial finance? Now, it is very interesting. It has some benefits, but it also has some challenges as well, because when you involve commercial finance would have a profit motive. So then it could undermine the social cause and social welfare if, let's say, commercial motive is integrated. But it is also a way to pool more funds as well if we allow this. So these are some of the issues in Waqf which we see. Now let me come to discuss one proposed model, which I have also presented previously as well. I'm having this opportunity to present in this August forum as well. So this is the structure. Let me just explain this and then I will stop. So in this structure, what we are trying to do is we are trying to pool funds from multiple sources of Islamic social finance. So in Islamic social finance, we have Zakat, we have Sadaqah, we have Waqf. In Zakat, we can also include Ushr as well. So these are the funding sources in Islamic social finance. So if, let's say, there are donors and there are impact investors in the economy, impact investors are not having a pure social motive. They are having dual motive. They have a profit motive as well as a social motive. And the donors, they only have a pure social motive. They are only contributing with the religious motive, and they are doing it for fi sabilillah. So if there are, let's say, people who are donors, who are having a pure social motive, and there are impact investors who are having a dual motive, profit plus social motive. So we can combine funds from both sources, from donors as well as impact investors. Impact investors would be investing in a saving fund. The donors would be contributing their charities in the form of sadaqah, zakat, and waqf, cash waqf in particular. So these savings would come into a cash waqf based microfinance institution. And this institution would be basically providing financial and non-financial services to the poor and non-poor clients. Now, it is very important to basically target who are poor and who are non-poor. It is very important to screen who are poor and who are non-poor. So poor would be provided with finance which is not priced, which is non-market based. It would not be a financing which is provided, which has a price. So for instance, you would not be providing murabaha financing to poor clients when they are very poor. You would be providing them assistance through zakat, through sadaqah, through cash waqf. You would be providing them not only financial services, because if you only provide them financial services, they would barely survive and they would just consume whatever they get. It is very important that you also provide them skills, and it is very important. So for that, you need to engage educational institutions. You have to include educational institutes and volunteers who would be providing training and volunteering services to the poor and non-poor clients. And you also need to create incentives for poor clients not to get out of the system, not to exit the system. So when you provide them lots of facilities, like for instance financial assistance as well as non-financial assistance, they would be willing to be part of the system. So what happens in microfinance is that people are provided with financial assistance for a short period of time. They take that, but they get out of the system because they do not have enough incentives or enough, let's say, checks to basically be part of the system for a longer duration. Because unless they are part of the system for a longer duration, they would not be having the chances for socioeconomic mobility. So they have to be provided with the subsidies on their purchases. So in that case, retail stores can be incorporated in the whole system. They would be providing subsidized purchases to the poorer clients. And the non-poor clients, they could be funded with the Islamic modes of financing, like murabaha, like ijara, like diminishing musharaka. And these non-poor clients would be having ability to repay these financing facilities with the price in murabaha. In the case of ijara and diminishing musharaka, they would be paying rents. and they would also be paying any fees for the services that they are availing. And you can also include the takaful and hospitals. You can include the hospitals which would be providing the takaful facilities. You can also include waqf-based hospitals, and they would be basically providing health facilities to the poorer and non-poor clients. So when you make it very difficult for them to exit the system, they would be willing to be part of the system, because they are knowing, these poor and non-poor clients are knowing that not only they are getting financial assistance, they are getting subsidized purchases from retail store. They are also getting takaful coverage. They are also getting skill-based training and development from the education institutes. So these stakeholders like education institute, like hospitals, like retail chains, they also have social motive. They also do corporate social responsibility activities. But when you engage them in an integrated system, you can have a greater scale of social services provided to the poor and non-poor clients. And when you ensure that the funding is coming from diverse sources, it's coming from impact investors and also from donors, it is quite possible to integrate all of that to have a scalable model where you can provide microfinance services, which not only provide financial assistance but non-financial assistance to ensure socioeconomic mobility. Now, very close to these models, we have real world examples as well. Like for instance, BRAC, tries to incorporate most of these elements. So if we are going to have more of these institutions, I think we can really showcase what Islamic social finance can do. So this is one way we can also effectively utilize Islamic social finance institutions. So in my talk, I've tried to cover that how to make our Islamic social finance institutions more applicable, more robust, more relevant, and to ensure that they are really achieving the redistribution objectives. In doing that, we have to revisit certain, you can say, discourses in our jurisprudential understanding. And while we are applying, we also need to apply our subject knowledge of economics and finance, and also our experiences in poverty relief measures to see how Islamic social finance can be integrated together to achieve scale, to achieve outreach, effective outreach, and to achieve impact, which are three important goals in any social welfare, you can say, program. So I would stop here. If there are questions, I think I would be very happy to take those questions. And sorry for taking a lot of time again.
Thank you very much, Dr. Salman, for this detailed and well explained session, mashallah. So we thank you very much. Our dear brothers and sisters, we do have just few minutes. I think if you have any question or any comment, we can just welcome very fast. Either you may raise your hand or you may write in the question box. If there is any comment or any question. In fact, Dr. Salman has covered and explained very well the contemporary issues in forms of wealth and produce subject to Zakat. And he has as well discussed potential inconsistency in Zakat management and estimation and collection. Then reassessing Zakat administration in modern economics. And lastly, he very well explained institutionalizing Zakat in integrated microfinance. These are the four main key contents in his presentation. And we dropped the slides, link of the slides in the chat group. You may get it there. And also we'll upload it in our official page in Facebook and Twitter. So I think there is no question and no comment, never mind. So we would like to thank our online guest participants, dear brothers and sisters all over the world. We thank you very much for your participation and for joining us in this session. And we thank our management and board members of Islamic Economic Association of Kuwait University, especially our Director General, Dr. Ala Al Ubaid, for their continuous effort in promoting these Sharia compliant modules and strategies globally. And our special thanks go to today's guest speaker, our very well known expert, and our dear brother, Dr. Salman Ahmed Sheikh, for your time, for your effort, and this very well explained session. We pray to Allah subhanahu wa ta'ala to reward you and to increase in your ilm, hikmah, and your effort, inshallah. Ameen. And lastly, if you have any last or concluding remark, Dr. Salman, yeah, please welcome.
Yes, thanks a lot to the Kuwait University officials, Dr. Mohiuddin in particular, for inviting me, and you are doing a marvelous job to disseminate knowledge on Islamic finance and Islamic social finance. Most of the things that I have tried to explain, I have used the book Fiqh Zakat by Yusuf al-Qurzawi. So I would recommend all of you to read that. And since you are based in Kuwait, and Yusuf al-Qurzawi is also from Qatar, so and he has written this book in Arabic. So I would recommend you to read these books. I would recommend all of the participants to read this book if you are interested in this discourse.
Thank you again, Dr. Salman. And we can see some comments and some appreciations, some thanking words from our guests and participants towards our Dr. Salman. They really appreciate your lecture and they are thanking you very much. So we thank you all. Thank you very much and see you soon in other sessions, very soon, inshallah. With that, we conclude today's session here. Subhanakallahumma bihamdik. أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك والسلام عليكم ورحمة الله وبركاته.